From a stock perspective, there's different spectrums. The lower end is very tough. You don't own assets. It's tough. Your costs are going up dramatically. Just look at Uber, look at Disney. Middle class is identified at 50, 60,000 if you're in Iowa, to maybe 300,000 if you're in California. Those costs are up, but the middle class is still spending. They're cutting back in certain areas. In some areas, it is amazing to see how good the consumer's doing, and that's going to weigh on the Fed's meeting, which they're meeting in a couple of hours. I think the Fed is going to come out and be really dovish. Not dovish, hawkish, which means that they're going to come out and say, look, there's no reason for us to cut rates. If you look at the expectations, we were looking at June, we're going to cut six rate cuts. We're down to 3 rate cuts. And they're saying, like, not only we're not going to see one today, we're probably not going to see one in June and maybe not July. So there's no reason for them to cut, because if you look at the expectations, Daniel, of inflation, the expectations have it going to 3.5% or higher. But reality is inflation is not really going that much higher. Why? Because you've seen the rental income component of the CPI come down a little bit. It's not coming down, but it's growing at the slowest pace in a very long time. And also you've seen oil prices crash, right? So when you're looking at that, and also new car prices, they're raising new car prices. Did you see the numbers on the used cars? The sales? Yeah, like the data that came out, it's like the highest it's been in many years. So it's crazy where people are like, why am I going to buy these new cars when I could buy? Listen, a car is one of your best investments. I know what you hear out there, and you're like, Frank, you're crazy, it depreciates right away. What you do with a car, and the fact that you can live in it, go any state you want, it's unbelievable the value you get. And they're so durable. I mean, there's not a car, it's not going to last you 10 years pretty easily and well over 100,000 miles. So people are like, maybe I get a used one instead of going through this whole tariff shit and all the new ones and high prices. You're seeing it. You're seeing it in the data, which is used cars. So how do I find ideas for used cars? How do I find, these parts and sales and used parts and used car sales? But there's a lot of companies within that space that are probably going to do very well. They're going to see sales explode right now as the tariff nonsense is coming in. A lot of these guys are moving their plants. They're starting to raise prices. They're trying to give you employee incentives and stuff like that, employee pricing. But the bottom line, new cars, you're going to see prices go higher, and it's why you're seeing, whether it's Ford or it's GM, a lot of these companies saying, hey, we don't even know if we could provide guidance because we really don't know what the hell's going on with Trump. He's all over the place. So, the used car market, there's a lot of good names in that space too, and just the parts makers as well should do pretty well. So, yeah, it's just interesting.
I think Jerome Powell will be extremely hawkish today, but I think it's a little bit for different reasons. His term is up in, a handful of months, early next year. And I don't know if you caught any of President Trump's weekend interviews he did. He took questions, and listen, he brings it on himself, fair criticism, about firing Jerome Powell. Well, he put all that to bed. In fact, he took the answer, or the road, if you will, to say, listen, he's leaving soon anyway. Why would I fire him now?
Man.
So I think that's Trump's mindset. Vice versa, I think there's a lot more emotions in politics in these independent people than what they tell us. So my point is, if you're Jerome Powell, and I put my sleaziness hat on, Frank, because not him personally, the environment he's in and must operate in. I'm about to get fired or let go, or nicely, paved way. I've served my term. Why in the world would you do anything to help a guy that you absolutely despise? And no, he hasn't said that, but I'm going on a limb. It's not hard to tell that they don't like each other. Now, why would you do anything to help Trump before you leave office when you can argue all the data is going your way to hold tight and just, take the name calling and stuff? By the way, trueflation, which I've been calling out several times here. Frank, what do you think trueflation has the U.S. inflation rate right now?
I don't know.
1.58%.
Which is, yeah.
Now that's up from 1.22% in just April. Okay.
Yeah.
That's still drastically different than what we're going to hear today, because we're forward or rear looking on that. But the point is, why would you help Trump if you're Jerome Powell when you have the data and you can just sit tight and ride this out? And really, the big concerns here are all the plumbing that go behind the scenes here. So what I think, in my opinion, what we should listen for today is, just like Chair Powell already hinted at last meeting, when they're slowing the pace of the balance sheet, I just want to listen for any little subtle reaction on, hey, what are they doing in terms of QE or liquidity? They will do something. He will talk about it. They already started easing last meeting. We'll see how that goes. But I think the majority of the headlines, this is really going to be a dud, because there's not a whole lot here to pull out of him.
I can't see him being dovish. I could see him being more hawkish, which means, we're not going to see rate cuts right away. And it could change the market perception. It likely is, at the end of the day. We'll see. But I don't know if it has anything to do politically, right? The voting process and stuff like that. If the market's really crashing, the market dictates the Fed, right? And people always come back at me and say, that's not true. That's not true. It's not the economy. It is true. Because they look at 2 months ago, a month and a half ago, when the market's at the lows, we were expecting, right? The Fed futures were expecting 6 rate cuts. Now we're expecting 3. Why? Because stocks have rallied back a lot more, right? Now since Trump announced tariffs, we're basically flat on the market. We were down, 10, 12%, whatever it was. But we bounced back a lot.
20 from the highs, basically, yeah.
Yeah, but since that announcement, right? So is it political? I don't know, but there's no need for him. Like, stocks are doing good. Earnings are coming in better than expected. You're seeing the consumer pretty much hang in there. And the longer you could hold this pace where you have that ammo, the better it is.
Yeah.
But if you see cracks in the foundation, I think all bets are off. It's not going to be like, well, I don't want to make Trump look good or anything. I mean, I think they might have been close to lowering rates if Trump didn't back off this freaking nonsense with tariffs and trying to deal with every country at the same time, because Besson said, hey, I've experienced this shit in currencies and everything, and we're seeing some cracks in the foundation. There's a lot of shit going on. We saw rates really pop in the 10-year, a lot of shit going on under the hood, and he was like, we're okay. And now you have China, where he's saying that, talks, we're going to sit down with them now, right? Are we going to sit down with them or not going to sit down with them? All I know is China announced another stimulus plan. And the last one was supposed to be the bazooka, right? It was such a bazooka that they have to announce another one, right? That's what we're kind of saying about China. So they're going to cut their 7-day reverse purchase rates by 10 basis points to 1.4%. They're lowering reserve requirement ratio, which allows banks to lend even more money. They're lowering by 50 basis points. They continue to do this. It fuels more money going into the market. In this case, if you want to put a dollar amount on it, it's $138 billion. They're going to reduce mortgage rates by 25 basis points, lower rates on 5-year loans, lower the amount of cash that auto financing firms was holding reserves to 0 from the current 5%, which, you can't go much lower than 0, right? So it just tells you how horrible China is right now. It's a disaster where the only positive of what Tepper was saying is, hey, we got this massive stimulus and now you're going to see growth and revenue is going to surge. And that's why we're going to see, China's great. And we saw at the beginning, but with tariffs, you're taking the only catalyst that you had, since they can't really sell to the largest consumer right now based on massive tariffs in triple digits. So they have to come to the table, and it hurts the U.S. as well. It hurts both of us, right? So they're going to come to the table. And when they do come to the table, I may say this, Daniel, and this is going to be a surprise in many, even some of my contacts in China, which one of them actually I don't talk to anymore because he got really pissed off at me for some reason because I had a different opinion than him, which is amazing. Not here to shout your agenda. I'm not here to fucking be a soundboard for anyone. I'm going to have my opinion based on data. If you send me the data, I'm going to have it. And, this guy was kind of out of line. I don't care. Listen, when it comes, if you're going to email me, you can email me information. I love it. And if I have stocks that are going down, it's open season on me. It's open season on Daniel. That's what we do. You could be pissed off. It's our fault, right? Hey, listen, you're spending your money based on what we're saying. That's, again, that's fine. Hey, Frank, you fucked up. I put money in this and that, and I get that part. But when you insult our credibility, when I see what's out there in this fucking business, in the newsletter business, of what people do and how easy it is to basically just disclose something and rob people, and you don't get in trouble in this fucking industry, and I'm trying to help people. When you insult the credibility part, you're gone. You're off my list forever. So be careful with that. Okay, you can call me an asshole. You could say I'm pissed off at a stock, and that's fine again. But don't insult the credibility. Like, don't insult like we're trying to cheat investors and shit like that, because that's something that's personal. And that's what we do. We're trying to help fucking investors because there's so much nonsense and bullshit out there. And the fact that we have no one above us, Daniel and I, that we could tell it how it is. Like, we don't have someone where you got to follow this. Oh, you got to follow this COVID initiative. No, fuck that. We're telling you the truth. I don't care who I offend. I don't care who comes on here. I don't care who my friends are within this industry. If I believe like something's not working or something's not going to work, I'm going to come here and say it. That's why people listen to this podcast. Why I've been doing this for 15 years, right? And now the listener base is starting to explode and get bigger and bigger, and I appreciate that. But I'm hoping that there's more outlets like this that just tell it how it is, right? So, when I look at China, I'm going to say this. I think China is going to be a buy pretty close here, because what America could do with China and how they have them on the ropes right now, and the shit that you're talking about, the largest economy in the world and the largest producing economy in the world. It makes sense for you guys to get along. And if you could tell me a risk in China that's new, right? And if anything I taught you over the last 15 years, if you're talking about something and you keep talking about that risk is already priced in, it's priced into China. Is there more risk? Yes. Is there a massive debt problem? Yes. Are they in big trouble? Yes. You see this from the stimulus price. Do they have a major problem with real estate? Absolutely, right? But all this shit we've been talking about for a while, where eventually, they strike a deal with the U.S., it's going to be good for both of these countries, and it makes sense for both of them, where they go to the table, listen, put your egos aside, and holy shit, I mean, you want to talk about something that could be a massive boost to the economy, to the global economy, there it is. I mean, both of these guys, they just check their ego at the door and say, okay, send us all rare earth minerals, like just lower some of the prices, fentanyl. Okay, we're going to buy freaking everything from you guys. I mean, holy shit. I mean, you're talking about an explosion here, and that's on the table. It's on the table. It really is. I mean, if you negotiate, and again, you don't have to go publicly and say who won and who lost. You can blame each other and whoever caved. But behind closed doors, there's an opportunity to really solve a lot of problems between two of the largest economies. And man, it could be really huge. But it's up to these guys. It's up to politics. And we all know what happens when it comes to politics. And there's a lot of bullshit behind the scenes. But let's see if that happens. But China right now, and U.S. in talks, and that's what made the market go up a little bit today. But it could sell off, especially. I can't see Powell being dovish or saying, hey, you know what, we're going to lower rates here. I just can't see him saying that there's no reason. I mean, inflation expectations are that suggest going to go high with tariffs. The consumer spending right now, right? So inflation high, the economy's doing good. You're not really seeing the slowdown. Yes, we saw a temporary slowdown in numbers, which is supposed to rebound. I think we're going to see that negative number go to a positive when it gets revised. If it does, it's going to be hard to really say we're a recession, which is 2 straight quarters of negative GDP. But let's see what happens. I mean, there's a lot of stuff that's self-inflicted here that can go away, that can really drive the markets. And China, if they can come up with terms with the U.S., man, it's going to be huge, especially with all that stimulus in place right now. If they can come up with something positive and they come out of those meetings in a month or two and say, hey, we're ready to rock and roll, you're going to see China stocks go through the roof. And again, a lot of people who are so goddamn negative on stocks. I mean, I love Kyle Bass. I think he's great, but he's been negative in China pretty much for 7, 8, 9 years, 10 years. I don't know. I just think there's a lot of things that could be solved here. Let's see what happens.
You have to follow the data. And quickly here, before we get into a couple earnings, I have to laugh out loud because the media, and I understand the media has a job. That's why you tune in here to kind of sift through it. But all we've heard since Tariff Day and Trade War Day and Liberation Day and all that kind of stuff is China and the U.S. talking? And Trump leads in and says, yeah, we're talking. We're always talking. And, oh, no, you're not talking. You're not talking. Blah, blah, blah. Now they're actually going to talk in Switzerland, of all places, which is kind of ironic and funny, middle of the road type stuff. And now the media is saying, yeah, but you're not talking about making a deal. It's just de-escalation. Of course, nothing is going to be good enough. Take that with a grain of salt. And quickly here, we're not being very bearish when we just talk about Fed Chair Powell, and I differ with, on the politics and the personal side. I understand that. But the point here is just because Fed Chair Powell might be dovish doesn't mean he's going to ruin the stock market. He might hurt today's gains or whatever. But one little caveat here, Frank, before we get into earnings. Did you see that Bloomberg reported that companies announced the largest ever buyback amount already this year? So going back through April, we're reaching 233.8 billion.
Wow.
That's the second highest monthly tally on record. I thought it was the highest.
That's monthly.
But that's still, yes, and it's still up near the record.
Shit.
My point here and just the takeaway is if everybody was, again, CEOs are supposed to be optimistic. We just don't want them to be all out cheerleaders. Nothing against cheerleaders. If the world is falling apart and the consumer's falling apart, corporate CEOs are not the idiots in a basket like this, Frank. Yes, they have to use money, but I'm just saying this is a tailwind. And couple that with Frank, if anything positive comes out of trade negotiations and you have these tailwinds because you have strong comparative to past historic times, you have much stronger consumer and corporate buyback or balance sheets right now, Frank. Let's get to earnings.
Earnings. You look at Disney. Disney bought back close to $1 billion worth of stock last quarter, which could be good and bad because their stock was like around 110 to March, over 100, even almost to April. But then, I don't know how much they bought back in the middle of April when the stock hit in the 80s. And now it's so funny because it's up like 10, 11%. They reported good numbers, but they're cheering these good numbers. But, you're looking at stock that's 100 where this stock was 175 in 2021. Man, you should just look back. You want to talk about...
Can I interrupt you?
No. No, you can't, because I just pulled up something that I want to mention really quick before you could interrupt me. I don't want you to interrupt me. I just saw this.
That's awesome.
Really quick. Holy shit. So this is going back to 2015. This is a stock that was $114 in 2015, I can't tell you the amount of shares that they bought back since then. And you're looking at a stock that's 104. So you want to talk about a lost decade. Gee, had it, maybe it's time. The numbers are good. But go ahead. What were you going to say? I was like, holy cow.
You have to give Disney credit. They are listening to the podcast. They are doing what Frank Curzio wants to do. And that is...
open up new parks.
Boom.
Damn, open up new parks. And I know this is going to take a long time, but did you see the terms? They're not putting $1 into that park. Someone else is building it for them.
Yeah.
And they're going into the marketing. I
didn't look at all the terms, but I did see them. They're not putting $1 in capital outlay.
Yes.
That's huge.
Which is...
it's got to be a multi-billion-dollar.
Yes. And what are they doing? They're going to be doing the merchandising. They're going to be the marketing. But that's what we've been saying. Like, use your brand. You're the best at storytelling. You're best at opening up parks. And this streaming shit, I know you're like, well, look at the cash flow in streaming and this and that. We added 1.4 million. I wish you'd tell me what the average revenue per user is and break it out, because I don't believe those numbers at all. I don't know how you're adding. Why? Because you're not providing lots of new content on the platform. You're not. And yet you're raising prices tremendously and you're throwing commercials freaking everywhere, right? So you're providing a worse experience in raising prices, which we're seeing a lot of companies do. And I can tell you, when you do that in history, you know what happens? This is where you see innovation. This is where you see competition. And you're seeing it across even Ubers. You're looking at Ubers and Lyfts, right? Uber and Lyft are what? If you look at those numbers, and Uber's down a little bit on the quarter, they had great numbers, but the expectations were sky high, but they reported good numbers. Guidance was in line. They were expecting higher guidance, I guess. I thought the numbers are pretty good. And Lyft as well. You're raising prices tremendously. That worked for you until now. And it may work a little bit longer, but what that does is open the door to competition. We're seeing with Airbnb. I don't know if you booked an Airbnb lately, Daniel. I don't know if you do that,
Negative.
but I booked an Airbnb and the fees were freaking outrageous. And same with VRBO. And now you're raising fees tremendously. Why? Because once you become a publicly traded company, Wall Street wants you to grow every freaking quarter for the rest of your life. And it's impossible to do. So now that you're raising prices tremendously, what does that open the door? Well, if you're a Curzio One member, you're going to hear about a fascinating company. It's a private company that's already up and running that's going to disrupt these companies tremendously. And it's from a guy that is an industry insider. He sold 2 businesses to some of the biggest travel firms, publicly traded travel for, I think it was 8 figures and 9 figures. Right. So this guy knows exactly what he's doing. He built up a team and he has a site, but he's, when you're raising fees and you're raising prices on customers and you're not providing them a better service, you're opening up the door to competition, innovation, and you're going to start seeing that soon across a lot of industries. Anyway, getting back to Disney, a lot of positives here. Okay, increased cash from operations from $17 billion to $15 billion, raised earnings per share guidance significantly from 8-9%, now it's 16% growth. I mean, the stock based on that is trading about 18-19 times forward earning, which is very strong growth, so it looks cheap here. Get added to 1.4 new streaming customers, which, they were projecting a loss, which is amazing. I don't know how they added them. I wish you could add as they did this in the past, right? This is why the stock went to 170, because they were like, we have 180, 230 million subscribers. You were adding them for like $1, right? But nobody cared about that. They just wanted to see the streaming service, which they were forced into, right? This wasn't some revolutionary thing and, hey, we could do it better than everyone else. Disney was forced into it because they were hit by COVID almost more than anyone. If you look at theaters, you look at the movie studios were closed. You look at the cruises, the parks, all business lines across the board were closed for them. So they said, let's do streaming. Now, the negative to me happened in the middle of the day. It didn't really hurt the stock too much. Is when the CFO came on CNBC and did an interview. And he goes, Disney's going to raise prices. We're going to raise prices on this platform. We think it provides tons of value compared to what cable used to offer. Well, you're not a cable company, and cable used to have a massive amount of different choices and channels, especially live sports and stuff like that, which you have ESPN. It's still a disaster. You don't even know what the pricing is going to be on it. Your linear business, it was down 13%. Content sales licensing was one of the biggest standout, right? So the revenue soared 54% year over year to over $2 billion. Right? Operating income came over $150 million. Great numbers. That was compared to negative the year before. However, what did you have this year? You have the new Lion King, Inside Out 2, Deadpool, Wolverine. The slate, not so good for 2025. That's why you're probably seeing a lot of analysts have not really come out and upgraded Disney, even though these numbers are great. Theme park business. Most of the gains driven by higher pricing. Did you see the international for theme parks? So if you're looking at Hong Kong and Shanghai, fell 25%. Now, why did they see growth? It wasn't like you had this massive traffic. It was the spend is because they increase in prices, which, you're competing. If you're going to increase prices, especially if you go to Orlando, especially you go, Orlando's has what? You have all of Universal's parks. You have other options there. You have other parks, like a secondary parks, and not like a Disney park, but you have other parks there. And plus Epic, I don't know if you saw Epic with their new park is booked for like the next 2 months or so. Content not that exciting for 2025. International park slowdown is likely to continue with tariffs. ESPN streaming, I don't know what they're going to do, but not only that, it's their sports betting, which is supposed to be big, is absolutely a horrible, complete failure of a business for them. I thought Penn would be a good play on that, and we got out, we did take a small gain and stuff like that. I thought it would surge because they have so many users, but the ESPN brand, even the videos and the players and the videos, it's just not that good. But I hate the fact that you're still focusing on streaming as this massive growth business when your best content, you can't compete with Netflix if your best content does not come on that platform first, and it doesn't. It comes out in the movies. That should be secondary. If you're looking at the park that they're going to open in Dubai, when is it going to open, Daniel? What did you say?
Abu Dhabi.
Abu Dhabi. When's it going to open?
Basically 7 years. It's 2 years to plan and just drawings and stuff. And it's about a 5-year construction. So 7 years, give or take. But he did say, hey, we're not doing a hard date just yet.
Yeah, but the thing is, this is where Disney got it right. When you look at Tesla and you say, how is Tesla trading at such a high multiple? It's because of the growth. It's because of the excitement, right? And yes, you've been talking about robotaxis forever. Yes, we're talking about, driverless cars forever, right? All over the place. It's now you're talking about robots, but it's just the future looks like you have these initiatives that are exciting. This is an exciting initiative. Now, say if they say we're going to open up 3 or 4 other parks around it takes 5, 6, 7 years. Now you have this massive growth catalyst. Instead of focusing on streaming, which is the most horrible business in the world, unless you're Netflix, the content is crazy expensive. And they're making money on it because they're not paying as much and not releasing as much content. So they're focusing on costs. They're getting away with it now, but he's telling you that you're going to raise prices without having a lot of great new content coming out. And you have commercials all over this thing, and try to cancel Disney on its service. It's impossible. You can't do it. I don't care if you're a freaking NASA scientist. You're not going to be able to cancel it right now. And that's going to change. They're coming out with measures to make it very easy to just click a button and you're out of the subscription. You can't do it at Disney. It's almost impossible. You almost have to write like 6 letters to 7 different people. It's impossible. It's amazing what they do. Seriously, try to cancel it. It's amazing. It's so many of these services are made to make it impossible to cancel. But overall, good quarter for Disney. I just think, look, if you want
access, buy yet.
I wouldn't be buying it up here at 110. Nope. I think all positives are factored in. Operationally, they're doing very well, lowering costs. I like the growth initiatives, finally open up new parks and stuff like that. The streaming, the ESPN, I think is going to be a disaster. The content slate, and this company's all about content. And their content slate coming out is not that good. And that's even coming from most of the analysts out there. And I think that's why you're not seeing these upgrades. But if you really want Disney 18 times, I don't know if you'll get hurt so much. I just think if you want streaming, you can go to Amazon. I mean, Amazon is great, right? Prime. And now live sports. I mean, that's who they're competing with. You want to see live sports, and they can't pay up for the live sports because they're competing against companies that could spend $5 billion and just not even know that they just spent $5 billion on this content. $10, $15 billion, which is, the Apples are getting into live content. You look at Netflix getting into live sports. Right. And that's a big driver of the next growth phase in streaming. And Disney can't really compete because they don't have the money. They're competing against the 5 largest technology companies in the world, where streaming is like their 4th, 5th business, which they really don't care about. And because they're adding those subscribers, it's able to filter in to every other thing that they're doing, whether it's AI, whether it's cloud, whether it's, again, advertising dollars and stuff like that. So I just think there's a much better place in Disney here. I wouldn't be buying it up here.
I like it.
But much better numbers. I got to give them credit. Much better numbers, and I like the fact they're opening parks. Good. I just don't like that they're focusing on the streaming still as their major growth engine.
I just like how Abu Dhabi has like Ferrari World, Water World. You talk about an oasis of money and fun. So good for them.
When you're great at something, when you have the content, when you have the storytelling.
Abu Dhabi, just the oil place.
Yeah.
Just they're not great at anything. They got resources.
Yeah, but when you look at Disney being this unbelievable, like just storytelling and marketer and just how they can license all this content and make an absolute fortune, there's so many growth avenues for this company that they could help all of these major companies in what they do and what they have access to and what they're great at. Focus on what you're great at, man. I'm telling you, that stock would really be $200 if they did, but it's not going to be $200 if your growth engine, which is CFO, came on TV and said, that's our biggest thing, and we're going to raise prices in your face and provide even more commercials right in your face unless you pay triple of what the average freaking person is playing for Netflix. I just don't understand that growth strategy, since your best content cannot come out on that platform. It always comes out in the movies. So are you going to pay like premium prices for streaming for secondary content that you already saw in the movies? I just don't think so. Let's get on to Uber.
Uber.
My
only takeaway here was, expectations were high. The stock ran about 30% from its previous lows. The market in general was selling off. The recent bottom, Uber had rallied similar to other stocks, but it had a strong rally into this print. I thought the print was pretty good, but really, outside of the numbers, if I can provide any value here, I think the biggest takeaway here was the CEO went on CNBC this morning. I caught most of that interview. I understand things can change quickly, but the takeaway here is consumers are not hurting near as bad as what the financial headlines are leading us to believe right now. I know bookings could have, maybe bookings missed the expectations. However, they still are showing strong growth. Ride shares were up 18%, if memory serves me correct. They have a strong balance sheet. They're expanding. The point is that the takeaway from the CEO was the consumer is not slowing down as of now. Of course, that can change. We're not bulls just for the sake of being bulls, but companies are telling you the consumer is not falling apart just yet. What else stood out to you?
Listen, at $83, you have to remember, first of all, you have to look at where it's trading price-wise. So does Palantir, I'll talk about in a minute. When you're trading at a premier valuation, and premium valuation, which is over 30 times forward earnings, you got to raise guidance. Palantir raised guidance significantly. Uber didn't, right? So that now you see it get hit a little bit, but it's near its all-time highs. I mean, its all-time highs, I think, are under 90. It's 84, right? I think it's like 86 or 87, I think, all-time highs. You're looking at a company with a $175 billion market cap that's growing, but at a 35 PE here, forward PE, NTM, guys, means next 12 months, and TTM means trailing 12 months. So, 34 times forward earnings, that's a very big number that you need to raise guidance if you're trading at that kind of valuation. But overall, this company has, it was 64 a month ago, and it's 83, right? So, same with Palantir, it's ran up tremendously, right? I mean, if you have these names that are going up tremendously into the quarter and you don't raise guidance, and even though expectations are high, that's what matters, what the analysts are projecting. That's what the analysts are projecting. Got to pay attention. That's all that matters when it comes to earnings. Because if the analysts are soft, that's our job. We want to try to provide the inconsistencies where we're like, wow, these analysts are really low in terms of their earnings estimates, and because they're going to provide a very easy beat and they're going to raise guidance, and that's what drives the stock higher. But when you have a company that those expectations, they've reported 17%, I think, was it revenue growth? I mean, they reported very strong growth, but, analysts had that pegged at 17%. So, when you're looking at Uber and just providing inline guidance, that's why you're seeing a little bit weakness here. And overall, I don't know if I'd be buying it up here. There's just even long-term headwinds with, competition, robotaxis and things like that. It's just, I think you're going to see more competition, especially, I think you're going to be, this sounds funny. You're going to bring taxis back into play because taxis are a lot easier to get out of an airport than an Uber. A lot of times you got to walk someplace to get it, and then you got to wait a little bit compared to going in. And the reason why you're like, I'm not dealing with this crap, you got to take out your, we know, right? That's why Uber and Lyft are amazing, right? So I disrupted the whole industry. But the big disruption came from pricing because you had a worse experience with a taxi and it was a lot more expensive. Now you're coming into the price where you're comparable. And sometimes I'll be honest with you. I have Uber. I use Uber all the time. When I walk out of an airport, if there's a taxi, I'm taking a taxi. It's similar to the price that I'm paying. And you're going to bring that back. And again, this disruption.
The pricing is definitely.
The pricing is up tremendously with these companies. And eventually, customers are going to change their habits and you're going to see more disruption because you can create multi-billion-dollar companies by just undercutting the price. And if you don't think you can, look at Robinhood. Look what Robinhood did to the entire industry. Hey, we're cutting prices, and look how big that company is, right? So, yes, they're not going to be making the massive fees, but when you're charging those massive fees and you're constantly increasing prices, you open up the door to companies and innovators and people who left these big companies, who sold their big companies, say, hey, there's a big opportunity for me to go against these big guys now because they can't lower prices. They're already expanded. They're already in mature markets. I mean, how many more markets is Uber going to get into? So, what we're going to do is raise prices. Yes, we're delivering food and doing other things, but they got to continue to innovate. But when you're raising prices that's significant, and that's how you're making the numbers, you got to continue to do that. That's what Wall Street wants to see. So it's going to come to a point where people are like, all right, I'm done. I'm going to go someplace else. Maybe it is Lyft if it's low price. Maybe it's taxis. Maybe somebody else comes out with another ride-hailing app. I don't know. But just the prices that people are charging right now are insane for some of these services, and they can't do anything about them, these companies, unless they want to see their stock come down tremendously because they're not going to be able to meet these inflated Wall Street estimates, and you're starting to see that, especially with Uber. So healthcare. I want to talk about healthcare. Holy shit. Did you see healthcare get annihilated yesterday? Oh my God.
I was not.
So I mean, healthcare, like the industry came down, like the ETFs came down like 6-7% on a whole. It was insane. And
what did Trump say?
Well, it's a new hire at the FDA, and he's going to be more tougher on the approval process. He was talking about cancer and saying, look, we're not just going to pass and give FDA approval to a company who, provides where you could, shrink tumors. We want to see it actually increase the longevity. Listen, the healthcare industry is the biggest corrupt industry on the freaking planet. You think crypto's bad? Healthcare is bad, and the whole government's involved in everything. I mean, I've never seen anything where my healthcare costs have continued to increase. They take a fortune. I'm the CEO of this company. Take a fortune, right? It's a massive expense. I don't know if small companies do this to the point where a lot of people aren't hiring anymore. They're hiring consultants to say you don't have to pay healthcare because it's so much freaking money. And not only that, now the deductibles are tremendous. You're seeing the price of drugs go higher, and Trump's actually said he's going to match prices in other countries that they're charging for drugs to Medicare. I mean, that's huge, and why wouldn't you? So you're seeing some of these drug companies just charge outrageous freaking prices for such a long time, and I'll give it to them because some of them I get. Like, people don't realize that to go through the FDA process and go through phase 1, phase 2, phase 3, by the time you go through there, the average cost is close to $2 billion that comes out of these guys' pockets. $2 billion in 12 years. That's the average that it takes for a drug to go from the clinical stage to get FDA approval. So when it goes there, now you're talking about the patents of 15 years where most of them are gone. 3, 4, 5 years to sell this drug, the price is going to increase dramatically. But they continue to increase these prices. And then it's, then the partnerships they do with cholesterol drugs is where they get a longer patent or a new patent on it for another 15 years and say they can lower cholesterol. Just the shadiness behind this is insane. And a lot of the shadiness is going to go away, which is going to be good for what? It's going to be good for us as a customer, right? As someone, everyone that uses these services, that uses, again, has prescriptions and stuff like that, it's going to be great for us because hopefully costs come down tremendously, which they need to do. And it's also going to be lots of companies and hidden gems in here. Like Tiva just reported, I thought they were good. They said they have operations here, again, in Israel as well, but a lot of operations in the U.S. where they're not going to worry so much in tariffs. And then the CEO, when they asked him about, hey, is this going to impact you anyway? He said, look, we're generics here. Is a big part of our business, which we provide the most lowest prices in the U.S. when it comes to generics. So we're hoping that Trump sees this and the Trump administration sees this and they don't bang us out in tariffs. Companies like that, like maybe some of the generics, we have one of those in our portfolio in a small cap newsletter because of venture opportunities. But you're going to see some of these companies, some of them are going to get hit harder than others, but there's a lot of hidden gems in there that you could find that aren't going to be impacted by a lot of shit that's taking place right now. Man, it's going to force, I think, these large companies to really... The M&A, now instead of raising prices, you're really going to have to innovate. You're going to have to go partner with a lot of these smaller companies and these biotech companies that have good technologies, and you're going to help them go through that process because they have money. I think you're going to see the M&A market explode because of these initiatives, which opens the door to small caps, which have gotten annihilated in this sector. That's one of the areas that I'm looking at. You'll see that through the newsletters and stuff like that, but a good opportunity because, man, they got annihilated yesterday. I was like, what the hell just happened? They provide even briefing.com and some of these services like the sectors, and I think junior miners are up 3%. Sometimes you see a sector down 2%. It was like down 6 or 7%. I was like, biotech's down 6, 7%. I was like, holy shit. So, healthcare, listen, in the news, a lot going on. Let's see how these things take place. And hopefully, the stocks are going to get hurt, and that's fine from an investment standpoint. But overall, everyone hopes your healthcare costs come down, especially the elderly. It's so difficult to even get Medicaid, Medicare. It's so difficult. I know because, you see it as, you're around your parents and older people and how much trouble it is. It's really freaking hard, man. It really is. It's tight. Daniel's over there having a good time.
It's sad because it impacts and affects all of us, but the healthcare system is, like
it's
I said,
so broken.
I was talking to a great friend of mine who's
So
a doctor out west, and he thinks I'm a crook and in a crooked industry. And I think this, I said, hey, the only thing worse than Wall Street is healthcare, pal.
Yeah.
And I love that guy to death. He's a great doctor.
Yeah.
Frank, did you want to talk any more on Palantir, or was your point just, hey, it ran up?
Buying every pullback. Buying every pullback. We've been saying that since 20, 30, 40, 50, 60, 70, 80. Easy
it's
very easy. Just buy Palantir and pullback. Don't listen to anyone who tells you that, hey, price of sales are a joke. This is insane. You're crazy. The valuation and stuff like that. And again, I made these mistakes, and I've been telling you. And hopefully you guys have been listening and making money. Yes, it fell like whatever, 10, 12%. After earnings, expectations were high. You've seen it come back. It's still over 110.
The stock ran from 70 to 125 into the earnings.
To the all-time high, right? But
near,
again, if you're looking at price to sales, you would have sold it at 20, 30, 50, 70, right? And we told you not to. Again, it's 110. It's on its way to becoming one of the top 10 companies in the world based on market cap. And that's the prediction. And it's inevitable. It's going to happen. Why? Because when you have a company that can provide these services, an immediate service to almost every major company in the world that's going to lower your costs and increase profits, dramatically improve productivity, you're the holy grail. And that's what this company could do. Everyone says they have AI. We work with AI. This is great AI and stuff like that. And advertise. These are guys that come in to oil companies, to defense companies, and just, you're looking at a CEO that you have to love. You have to love Alex.
No,
you have to love him. If you're an investor, you're an investor in this stock, you love him because he's like, F you. If you don't want my stock here, we raised guidance tremendously. We're showing tremendous growth in our company. We're seeing, massive sales, massive increase in everything across the board. If that doesn't make you happy, then sell our stock. For me, this is a company where you got to stop looking at the valuation because the valuation is valuing in the past. You're looking at total addressable market. This is where I got Netflix wrong. This is where by Apple early on, I didn't understand it. I was like, Apple, was trading at 70, 80 times forward earnings during its growth trend. Now it's still trading, I think, at a 30 plus PE, and you're seeing slower growth. You're seeing some downgrades of Apple. They're dying to get into AI, and they ruined that. But just, even the Microsofts, you have to look at the total addressable market. The total addressable market is every single company in the S&P 500 that wants to increase productivity. and that could use this company. And when you look at that and see the total addressable market, now the valuation fits. And again, I've got this wrong. We've been telling you the whole freaking time. I've got some things wrong. I didn't think tariffs would be that big of a deal. I didn't think Trump would be that stupid to try to negotiate with everyone at the same fucking time. You know, we get things wrong sometimes. This is one that we got very right. Why? Because I made mistakes in the past, and that's how you have to look at investing. When you're making mistakes investing, don't get pissed off. Sometimes it's a blessing in disguise. Say, why? Why did I mess this up? What did I get wrong? And that's how I do it with Netflix. This is what I got wrong. We didn't get it wrong with Palantir. We hope a lot of you have it. We have it in our portfolios. I hope you guys kicked ass in it. Every single time you see a pullback in this thing, buy it and hold it and buy more, because that thing is going through the roof. It's going to be one of the top 10 companies in the world, probably within 2 to 3 years. So this thing is going to go a lot higher because they have the holy grail. You got to look at the total addressable market. Don't look at price to sales, just like you can't look at valuation for Tesla. It's the growth. It's where they're going to go over the next 5 to 10 years, or which drives Tesla. Please stop talking about valuation of Tesla. It hasn't mattered since the company existed. Since the company first came out, it hasn't existed. So stop talking about valuation when it comes to these companies. It's about innovation. It's about where they're going. AI, if you listen to everyone, AMD today, which by the way, I'm listening to the AMD CEO. I think AMD CEO, is it me? I mean, I think they're related to NVIDIA CEO.
Oh.
The
Are you being funny or are you serious?
I'm being... They are related.
Oh.
They are related.
Okay.
Yeah.
I have no idea.
No, I didn't know that either.
Okay.
I had a plane ride back with someone who's very high in the industry, which is really cool. They look like the same person to me. One, it's just the same height, the same way.
AI on that.
Anyway,
maybe we're being duped.
But you know, every single company that you're going to talk about says that AI is the greatest thing in the past 50 years, the greatest technology in the world, and you have the company that does it the best, better than anyone in the world. Okay, it's that simple. Sometimes that's what your kid would tell you if he's analyzing it. Wouldn't look at price of sales. I wouldn't like. Oh, they look at simple stuff, and that's why kids sometimes are the best investors, because they say, "Hey, I like this product, and it's great," and that's all it takes sometimes. You know, when I look at Palantir, you got to buy on the pullback. Keep buying. We've been telling you to buy, man, for a very, very long time, and that's one of the big winners that we had. I'm happy because a lot of people did follow us into that, and it's in our portfolios, and I'm glad you're doing well.